Hi guys, firstly sorry about the lighting and the backdrop. I haven't got anywhere else to record this, and it was getting pretty late here. This video is really good that Dave has sent in, that he shared with us. This is his second trade. Have a look at this, pay close attention to what he's doing, because it really is some very powerful stuff indeed.
So this is trade number 2, which I took today on Tuesday. So Asian session is here. This is the early London session, and to be honest, I missed my entries here because I didn't have any confirmation, and I didn't have the stop loss raid that I always look for before a trade. And so now we're in the New York session, and this push down is actually the news out of the US. So there's this push down, there's a second push down, and now we have this pressure point that is painted, and this for me is a very, very clear indication that I've had this stop loss hunt, and so I can enter along. And I did enter after this push up. I put my stop loss under candle here, and this time I basically was looking to trade towards the high of the year because we're very close to historic highs on gold. So this is how it panned out. It actually moved up very, very quickly, and there you go. I exited on this diamond, and that was trade number 2, again using P.A.T indication as a very strong aid for confirming my trades.
Just before we get on to the next section, I think it's very important to realise what Dave is talking about when he says about the story. Once that story's gone, is there any further justification for you carrying on with that trade? And I would argue there isn't. Indeed, you should really think about whether you're going to carry on and chase around that trade, or you're just going to come out and wait for the next one.
Hi Martin, I thought I'd do this video to just going back to my second gold trade that I sent to you on Loom. And the reason I wanted to do this is it could be helpful, maybe not, but I just want to show to you what I do on why I follow not only on 15 minutes with P.A.T, but once I am ready for an entry, I look at a confirmation with P.A.T with either a pressure point or a diamond that follows. I look for certain criteria that show me that I can enter the trade. And the reason why I want to do this is kind of to uphold the idea that you keep trying to push in terms of having tight stop losses and not moving those stop losses. You don't need to give the trade or the market some room to breathe. It's either going to be a reversal or it's not. It's either going to go in the direction that you're expecting or not. So this is the trade. This is just before the news out of New York, sorry, and boom, it goes down, and then it does what it does with all of its volatility as it normally does. And I was, hoping there would be some sort of a stop loss hunt, which this is a stop loss hunt because the gold was very bullish at that moment. And so it keeps going down, and for this takes probably about half an hour, and then I have these 2 pushes down, and this green here arrow represents the pressure point that is painted by P.A.T when we actually turn to the next candle. Just before that, this is what I see. This is what I observe. It pushes back up. So I have these strong pushes down. If you look at the normal price action, on a 1 minute basis, it's all, it's very small. And here it goes down, and all of a sudden there's this counter push up. For me, that is the sign. That is the signal. And on top of that, I get it with P.A.T. So I'm ready to enter. But I still wait for one more thing. I wait for it to come back down a bit. And here, right at this moment, I can enter a long trade. I don't need to wait. And if I've got the proper money management strategy, which I do not allow for more than 0.5%, I can basically put my trade, my stop loss, a very, very tight stop loss with 0.5%. I'm not looking for more, because look at what I'm looking for in terms of a potential risk reward. It is huge, and I don't expect it. Not all my trades like this. Sometimes I just get 0.5%, and it's a 2-to-1, so I'm going to get a 1% reward. I don't need, but this week I've had a few of these with some very, very good risk rewards because gold was so bullish, and this is what happens. The rest is history, as you know, that trade was hugely successful. So the point, again, that I just wanted to make here is that if the trade here, if the market actually pushed below where I have my stop loss, it means that this story here of the reversal, I've seen this over and over again on a 1 minute. When it's time for a reversal, you're going to see a strong push in the opposite direction. You're going to see a little bit of a retracement, and then it'll continue up. It happens over and over again. If this story is broken, if the market just continues to go down after this, then my story is invalidated. There's no use widening, the stop loss just to encourage some more losses. It's not worth doing. You get out, put the stop loss very tight, and that's how it works. I hope this is helpful.
And in this next bit, it's going to talk about how he breaks this down even further and puts it into context. Very good to listen to this and see how he does this, how he puts everything together. I'm sure you'll learn a lot from this, and it will improve what you're doing greatly.
I'm enjoying doing these looms, Martin. I just want to share a little bit more on today's trade, the pound dollar trade, and which ended up being hugely successful with about 50 pips profits. And again, I just want to talk about the whole contextualization things and using P.A.T within the context, that because if you don't construct a narrative that kind of stacks up in favor of the trade you're going to do, then you're likely to make some mistakes. So I mentioned that there was this here, yesterday's news, this impulse down on the pound dollar and reversed. And then it comes back to this point of origin. Now, for me, it's a very, very simple thing, that the origin of this impulse down, what we should have seen if this was really going to continue to go south, is that the sellers here would defend that. The big sellers, the market makers, they would defend this position here, or they wouldn't go much higher and then reverse again, maybe grab some stop losses above here and reverse. Instead, what we saw is just a few attempts here, 1, 2, and then we breached that. So this first breaching of this impulse origin here, for me, it's telling me that there actually weren't any sellers there. So this was the manipulation. If there were strong sellers, the market makers would have defended, as I said earlier on. So once it's breached, I get this pressure point, and obviously there was the news. So everything is confirming, everything is kind of like stacking up in favor of going long, which I did here. And as I said, I put a very small stop loss, which is about 7 pips, and up we went. So yeah, just wanted to share that with you, that the whole idea of contextualizing with things that are common sense, sellers here, if they were really here, they would have defended this zone, obvious bigger zone, maybe within this whole overnight. They would have defended it, and it would have gone with another impulse down. So just ideas that I want to share in terms of how I think, and what I was thinking this way before, but what P.A.T is doing for me, actually giving me that extra sense of confidence, adding to the story, and giving me those confirmation points that I needed, because I wasn't as confident as I was before using these narratives. Now I'm much more confident because of these indicators. So yeah, thanks Martin, because this is a great tool.
And finally, Dave said something that's very important. He talks about relaxing and having the confidence. And this is so important, because once you start getting these wins and the confidence starts to build, you become even more confident, and it sort of builds up. It sort of progresses on and on from this and builds up to the point where you feel extremely confident in what you're doing, because you know you're making money, you're becoming successful at what you're doing, but more importantly, where that all comes from, and which is a base understanding, and the P.A.T indicator is giving you this base understanding from where you should be placing your trades, when the story is active, and when you want to abandon it. Well, that's all for now for this evening, and I'll catch up with you very soon. Take care.